Well, to help us look at the oil market now in more detail, I'm joined by Viktor Katona, lead crude analyst at Kpler. Viktor, thanks so much for joining us. Well, let's start with your assessment of those OPEC production cuts. The markets seem unimpressed. Are they right to be unimpressed?
Well, genuinely, the two main emotions in the markets right now is confusion and disappointment. Confusion because no one really knows what the physical impact will be of the production cuts. Can we actually trust OPEC members that have taken on these additional voluntary cuts to actually fulfill them? That's question number one. And the disappointment largely stems from the expectation of actually much larger cuts. What was Plan B? What was the Plan C that was discussed? It very much feels as if the end result is not something that initially OPEC Plus wanted to do, but was kind of forced to do given the circumstances. And I think that's a little bit unfair to Saudi Arabia, the de facto leader of OPEC Plus, because think about it, they have managed to pull other Middle Eastern producers into the voluntary cut game. They've managed to wriggle out bigger commitments out of Russia, and they've managed to sort out the West African production quota conundrum. All in all, it's a good summit for Saudi Arabia, but the market is largely unimpressed because they expected more.
Now, one other thing that came out of the meeting was that Brazil is now going to be a member from next year. What do you make of that?
I think it's certainly an acknowledgement on the side of OPEC and OPEC Plus in general that Brazil is a player to be reckoned with. Brazil has been one of the biggest sources of supply growth this year and will remain so over the upcoming period. Brazil has a very good portfolio of projects in the pipeline, and they will grow. So it's an acknowledgement that Brazil is a serious player. They don't really expect anything from Brazil. Brazil doesn't really have a production quota when it effectively becomes part of OPEC Plus. Starting January 1st, 2024. But it will be at the table with the big guys. And that's an acknowledgement that Brazil has grown and now is already on par with UAE or Iraq in terms of overall size and the impact that it has on the markets.
Now, we were told earlier this year by many forecasters that there will be supply shortages. And, you know, the US economy, last GDP numbers showed that the economy was growing more strongly than we thought. So why are prices not reacting accordingly? Why are we not seeing a big jump in prices?
I think there's still a tacit anticipation that things are going to get much worse come early 2024. So at some point, there is still a risk of a hard landing in the United States. As good as things look right now, macroeconomic sort of pressures on oil prices are still there. And effectively, 2023 has been a year when many people expected, as you said, the shortages. But they were largely, I mean, the production cuts from OPEC Plus was largely offset by production from non-OPEC countries. So again, nature abhors a vacuum, and the oil markets abhor a vacuum as well. And so effectively, the shortages were very much avoided by means of other producers. And I think that's going to continue into the future as well. You cannot yield too much space. Someone will take it.
Viktor Katona, lead crude analyst at Kpler. Many thanks for those interesting thoughts.